Well, hey, Dealmakers, and welcome to the show where it's all about financial freedom with real estate. Let's do this. All right, guys, welcome to the show here today. I'm really excited about that. We're going to talk a bit about rising inflation and interest and how that's affecting our underwriting. I'm going to get Garrett on the show here in a couple seconds. And our guest today is Jonathan Way. And his story is super interesting because he kind of partnered his way to syndications. The first few were all partnerships, and today he's doing his own deals. And even though English was a second language, and he's basically a total introvert, and here he is finding deals, talking to brokers, and raising capital. So we want to know how he did that, because there's some of you out there who are maybe a little shy, right? He also talked about Dealmaker Live in the interview, and this is where he met literally 3 or 4 of his partners at last year's Dealmaker Live, and it's again coming up in June 2nd through 4th in Dallas. You can get tickets now at dealmakerliveevent.com. This is a must-attend event, not only to learn about syndications, how do you raise capital and find deals, what's working now, but also to network, find partners, find deals, and find capital. So make sure you grab a ticket. We're about half the capacity, a little bit over halfway capacity. So get it on there because we will cap it once we reach about 500 people. So it's dealmakerliveevent.com. All right. Shout out also to Joe Hornet. He left us a review on iTunes. Michael and Garrett do a great job of encouraging a new entrepreneur. Love the show. I love it, Joe. Thanks for that. Appreciate it. I'll do a shout out to our first Dealmaker, Alex Escobar, right? He's a Dealmaker Mastermind member, uses the syndicated deal analyzer, and he did his first deal in Danville, Virginia, 26 units for $600,000. He did his second deal with 64 units across the street from the first one. That was $2.4 million. And he quit his job in early 2022, kind of like Jonathan did as well. So I guess Alex might be on the show here pretty soon. And he says it started with the yellow book. Like I said, he got busy with a syndicated deal analyzer, joined their Dealmaker Mastermind community, found his partner, and then have been doing deals together since. So congratulations, Alex, on quitting your job. That is awesome. Well, hopefully we'll find out more about your story. If you want to work one-on-one with one of our full-time syndicators, check out our mentoring program. It's at themichaelblank.com/mentor. If you want to accelerate your results, do bigger deals faster, scale, and avoid some of the bigger mistakes. If that describes you and you value mentorship, then check us out. We're the only program that actually guarantees that you'll do your first deal in the first 12 months. So we're really confident in what we can do with you. So check us out at themichaelblank.com/mentor. Schedule a call and let's explore if mentorship is right for you. So with that, let's get on Garrett here. Garrett, what's going on?
What's going on?
So one thing that we're watching a lot here is obviously we've been dealing with rising inflation, which has been magical for multifamily. I mean, just magical because, man, the rents are going up. And with that, the valuations, we're getting valuations that we're not projecting for another 4 or 5 years. And now we're getting a little bit of something that we haven't had in a little while, which is rising interest rates. We try to underwrite things consistently, but we're not blind to the fact that the market is changing. I mean, we used to underwrite increase in rents between 2.5%, 3%. Well, is that really accurate? No, it's not really accurate, right? We're always assuming slightly higher interest rates, and that's fine, but that's not maybe accurate in 2 years from now as well. So how has both of these things kind of factored into our underwriting, and how should listeners and people watching this maybe think about their underwriting?
When you're underwriting, it's all about where you're putting in conservative measures in order to make sure that your deal goes as planned, because there's all kinds of variables that can come up that can change things and change the direction. So I think before, some of the conservative measures that we were putting in were just keeping our organic rent growth on the lower end, like 2-3% consistently, but that's not the reality. The reality right now is that it's like 8% in a lot of markets, or 7 or 6%. We felt comfortable in raising that up a bit in the next 2 years, up into 4 and 5%, like just keeping it still conservative, but not overdoing it. On the other side, we have to make adjustments in areas that really are true, which is that interest rates are going up. And so we've entered deals now starting at 5% or even higher in the refinance, if you're putting that in your model as well, just to be conservative, because they're going to go up. So you have to account for that and make sure that you have plenty of padding in there so that you still have the right track for what the multifamily model looks like. It still looks phenomenal, guys, by the way. You still have really good deals that are out there, and you can pick them up because people are scared they're going to sell stuff, but you have to account for the right variables.
We just finished a raise for Chelsea Apartments, a really cool deal. We did some sensitivity analysis. So I was just curious, hey, what if interest rates actually were to match the inflation rate? So what if it went from 4, 5, 6, 7, right? So let's say we have an inflation rate at 8%. What would it look like with interest rates at 8%? Like, what would it look like? And what we found is the return the IRR, the average annual return, whatever you want to call it, is exactly the same. So if there's lockstep interest rates going up with inflation rate, the returns are actually the same as they were at 4%. So if both are 8%, okay, the returns are exactly the same. If we're projecting a 16% IRR, for example, with interest rates at 4% and inflation rate at 4%, it'll be exactly the same at 8 and 8. Isn't that interesting? I don't think that's what's going to happen. What's going to happen is inflation is going to outstrip interest rates, because the Fed is never going to raise interest rates to 8%. We would literally default on our debt. We would have to devalue the dollar. Ain't going to happen. So what's going to happen is the inflation rate is going to stay high, 10%, and the interest rate might be an astounding 5 or 6%. What's going to happen is the actual return is going to go up in that environment, because that gap between inflation and rent growth and rising interest rates is getting wider and wider and wider. And so this is great for multifamily. But for your underwriting, for the next 2 years, we're going to use a higher rent growth because of that inflation. That's also going to affect your expenses. So in your underwriting, make sure that if you project, let's say 7% inflation and rent growth, that your expenses also go up by 7%. And then use maybe 2% higher inflation rate if you're going to sell or refinance down the road. And what you'll find, as Garrett was saying, is these deals still pencil, but just make sure you use them, because your investors want to know that you're paying attention to these kinds of things. It doesn't change the strategy. It just changes the tactics, and that's one of them. I hope you'll join us at Dealmaker Live. It's in June 2nd in Dallas. Easy to get to. It's at dealmakerliveevent.com. Also, if you're interested in investing passively, you're like, man, this is great what Jonathan did, but I don't really have the time or the interest, but I do have some capital to invest. I want to take some out of the stock market. We'd love to have a conversation with you at Nighthawk. Check us out at nighthawkequity.com. Click the join button, and you can schedule a call with us and see if investing with us is the right way to do it. So hopefully we'll have a conversation soon, and catch you in the next episode.